All right. It's that time again. Late night crypto talk. Bitcoin Brandon here. What's going on, everybody? It is Monday. You guys ready and excited for our brand new week? Home from work. Had a chance to eat your dinner. Relax for a bit. Come to think of it, I haven't done a late night crypto talk in a while. Been always busy in the evening times. I've got to adjust my schedule a bit to make sure that we still get these in. As a disclaimer, I am not a licensed financial advisor to be dispensing financial advice. I read the news, give my opinion, and you decide what you want to do based on your own investigations. So what's going on, Renee? Deborah, Rickard, Christy, Mafoos, Bill Childers. Welcome, Late Night Crypto Talk. Now here is my other thing that I live by in the crypto space. 4 rules to survive this space. Rule number 1, you need to be educated. Crypto education is the key. Rule number 2, never invest with money you cannot afford to lose. Rule number 3, always get your return on investment back. And rule number 4, find a vehicle that's going to get you to where you want to be. Where do you want to see yourself 3 months from now, 6 months from now, a year from now? And what are you willing to do to get it? Stay focused. Do not get distracted. There's so many different things in the crypto space to be on top of that can distract you. Remember, your funds or your resources are limited. And if you follow these rules, it's not going to guarantee you success, but it will guarantee that you limit your risk. This is a risky, volatile space. All right, let's go ahead and get started. Just a couple of articles that we're going to talk about. I will briefly mention this article about Twitter. Came out 18 hours ago, and then there seems to be a correction since then. I don't have that article in front of me, but this article here I will put in the chat box about Twitter bringing the ban hammer down on the Bitcoin. Oh well, let me look at the article itself. Bitcoin in brief Monday. Twitter wields the ban hammer, shuts down at Bitcoin. So let's see what this is talking about here. The cryptocurrency space is rarely short of drama, but there's something about Twitter drama in particular that sets tongues wagging and crypto influencers crossing swords. The suspension of the popular @Bitcoin account on Sunday has sparked furious debate. In today's edition of Bitcoin in Brief, there's all that plus some ludicrous claims from new blockchains. Ever since the @Bitcoin Twitter account pledged its allegiance to Bitcoin Cash, some Bitcoin Core supporters have been hell-bent on having it shut down. You know, it's stuff like this that I see, this little infighting, that's making the Bitcoin Expo in London that I'm going to go to next week more exciting. Because it seems every time these guys get together, something's going down. I read the report last week about Vitalik Buterin, the founder of Ethereum, who called out self-proclaimed Satoshi Nakamoto Craig Wright. And it was a video about it. I thought it was funny as hell. It was like East Coast versus West Coast, but in the Bitcoin world. It's like they're coming from behind their keyboards as internet gangsters and trying to do something with each other. It's funny. But anyways, it looks like you've got Bitcoin supporters throwing heat and shade at Bitcoin Cash supporters. What this seems to be all about. Says if accounts can be locked. Did I read that right yet? If accounts can be locked out on the say-so of enough dissenters, it doesn't bode well for free speech. Sure, it's Twitter's playing field, and they can take the ball away anytime they like, but if they're going to do so without rhyme nor reason, it doesn't inspire confidence in the platform. In addition, the fact that amidst the suspension, some random Turkish dude was briefly able to register the @Bitcoin account anew suggests that Twitter has handled this whole thing very badly. At the time of publication, the account has changed avatars twice and is now locked, making it viewable to approved followers only. Alright, let's scroll down from this. See, Vitalik Buterin doesn't fear ASICs. Well, since when did Vitalik Buterin become the gangster of the crypto world? Have you seen this kid? No, I'm just saying. Maybe behind the keyboard he's got a fat bank account. But he ain't running up on me. That's all I'm saying. He's the bad boy of the crypto world. Vitalik Buterin. He's the biggie. He's the Tupac. Goes on to say, Monero may have forked in a bid to stay ahead of Bitmain's ASIC miners, but it looks like Ethereum won't be following suit. The Ant miner E3 has recently launched with the specific intent of targeting Ethereum's algorithm. In a developer meeting on Friday, Vitalik commented, getting everybody to upgrade is likely to be fairly chaotic and detract from more important things. So at this point, I personally lean quite significantly towards no action, given that Ethereum will be switching from POW, which is proof of work, to proof of stake. Eventually, mining concerns would seem to be minor concerns for the Ethereum founder. Alright, let's go on to the next article. Bitcoin's value. Oh, let's go talk about Venezuela first. This seems to be shocking news out of Venezuela. And for those of you who don't understand, why am I talking about Venezuela? Always know what's going on with international politics, geopolitics, in the crypto space, because what happens overseas affects all of us. So just a quick background. Venezuela is a socialist nation. They're currently enemies with the United States. Allies with the Soviet Union, allies with Russia. United States has sanctions on them, just like we have sanctions on Russia. Russia is embracing the cryptocurrency space full steam ahead. The main motive behind it is to marginalize the US dollar, to get away from Washington to control, so that sanctions don't hurt them. That's their main point. They've got the Euro-Asia Pan Alliance. Countries like Russia, Iran, China, North Korea, Iran. That they're putting together trade of oil and other goods outside of the US dollar. They want to put together a gold-backed currency, digital currency. Some are calling it already the ruble coin. But before all of this takes place, Venezuela is falling apart at the seams, or has been. Inflation is out of control. The people's main source of income is Bitcoin mining. Go figure. The president came up with an idea, or did he? But Venezuela launched what's called the Petro coin, backed by their oil. News came out that they are being coached by the Russians. The Russians are the ones that gave them this idea. And I believe, and this is not backed by hard facts yet, but you can put two and two together, that Russia is using Venezuela as a test subject, as a guinea pig, with their first virtual currency, the petrodollar, or the Petro coin, which is the same as what Russia's coming up with, the ruble coin. They're seeing what's going to happen with Venezuela. Let me put my phone on mute. Everybody calls me right now. Mute. All right. So, the parliament of Venezuela was against the Petro coin because they saw it as Maduro trying to scam the people again and steal the money. But now it seems like there's been a change. So let's read this article. Venezuela approves decree on the use of cryptocurrencies. Who's this author? The author's important. Kevin Helms. He's pretty good. What's going on, Lashana? Venezuela's National Constituent Assembly has approved the decree on the use of cryptocurrencies and the country's new oil-backed currency after repeatedly declaring the petro illegal. The new currency began its initial coin offering last month as the Venezuelan president continues to strongly push its use. The Venezuelan National Constituent Assembly has approved the draft Constituent Decree on Crypto Assets and the Petro, the country's government announced last week. I remember when I covered this in January, when Maduro announced the Petro, and the people were all for it, and the parliament was not. I even said back then, I said, I don't know how long the parliament is going to be able to go against this if it seems to be the only way that the people in Venezuela are going to eat. The people are going to be for it. They're already Bitcoin mining. And now it seems they've caved. So it says, we are making history with the approval of the decree on crypto assets and the cryptocurrency El Petro. Nothing can stop the impulse of our country. That's what Tariq Al-Assemi, superintendent of cryptocurrency, confirmed. According to the vice president's announcement, this decree is intended to establish the basis for the management of these alternative mechanisms in financial and commercial activities. Sputnik News elaborated. Sputnik? Isn't that Russian? I don't know. Sputnik News elaborated. According to the document approved by the Constituent Assembly, President Nicolas Maduro will have the power to regulate the issuance, organization, and operation of the petro, adding that the purpose of the decree is to allow the use and exchange of crypto assets. Interesting here. Crypto assets is spelled CRYPTOASSETS. All one word. Why do I bring that up? Well, in our cryptogenics, somebody questioned the correct spelling of crypto assets. So I'm just saying, I just find this interesting. You see that, Kathy? Yeah. So how are we going to spell it now? What are we going to spell it? That's why I said in the Bitcoin world, it's all one word. Do we separate it in two words? All right, let me continue. That's a side joke. Kathy, co-owner of Cryptogenics, knows what I'm talking about. The purpose of the decree is to allow the use and exchange of crypto assets by natural and legal persons, residents or not, in the territory in order to advance the economic development of the nation. I agree. We leave it as is. I mean, that's the way it's spelled in the crypto world. Crypto assets is one word. Some put a dash in between crypto and assets. Some use it as two words. But in the crypto space, it's one word. I've seen it repeatedly like this. Okay. The decree would enter into force once it is published in the National Gazette. According to Crypto Noticias, it consists of 12 articles in which the legal basis for the launch of the petro and the use of crypto assets in the Venezuelan national territory are defined in the same way that the use of these assets is guaranteed, the news outlet detailed. The ANC has previously declared the petro illegal, and in violation of the country's constitution. The Adeco Bourgeois Assembly took out a resolution to prevent Venezuela from having the petro. President Maduro expressed after the decree was passed, adding that the petro belongs to the Venezuelan people. See, I knew when he did that he was going to win. If people are starving, they can't pull money out of the ATM. Even if they do, they can't buy anything with it. They're going to go with whatever's working. And the petro's what's working. So he knew this. He played a game of chess here. All right, integrating the petro into Venezuela's economy. The petro supposedly began its ICO last month following a pre-sale during which Maduro claims to have raised roughly $5 billion, but has yet to provide any evidence of doing so. He then announced last week, in the next few days, I will take stock of the achievement of these 15 days of selling El Petro. The Venezuelan government under Maduro's command has been actively promoting the use of the petro. On Friday, the Superintendency of Cryptocurrency explained, I remember when they announced this department, the superintendent. We're living in very unique times, ladies and gentlemen. This is history in the making that we live in right now. We're not reading history, okay? We're reading how the future is being forged. It's like going back in time and being alive during when the founders wrote up the Declaration of Independence and the Constitution. That's kind of where we are right now in the crypto space. A unique time to be alive in history. Enjoy that aspect. Sometimes just revel in it for a second. All right, let me continue. The Superintendency of Cryptocurrency explained the guidelines for using the new currency to representatives of more than 100 shipping agencies in the country. In addition, Maduro announced on Friday that ambulances have now been purchased using the petro. Ambulances. During the reopening of the pediatric system of Rafael Medino Jimenez Hospital in Vargas State, he said, "We have received 30 ambulances that we are delivering in Vargas State, and we have achieved this through agreements with companies that we have paid with petro. Here is the key to the new ambulance that Parriata Hospital will have. It is the first ambulance obtained in petro. I give it to you." That's very interesting developments in Venezuela. I'm telling you now that Russia is behind it, and that Russia is going to duplicate the ruble coin. And don't be alarmed, but the United States is going to do the same thing with the Fed coin. It's not a matter of if, it's a matter of when and how. I don't have time to go into that. I already went into that in multiple times in our previous crypto talks. I'll save that for another time, next time it's brought up. All right, let's talk about this last article that says Bitcoin's value to lose 44 billion by year's end. Okay, now this is interesting because so far all the news that I've been reading has been about Bitcoin's expected to be $25,000 and more by the end of the year. So this one's doing the opposite. So first, I'm going to CoinMarketCap right now, and I'm taking a look. The total market cap is 260 billion. That's interesting because in December, it had reached almost $800 billion. The total crypto market cap, 260 billion. It's getting back down towards numbers of when I first started really looking at Bitcoin seriously around May of last year. Bitcoin right now, market cap is 115 billion. Last year, I remember when it was at about 40 billion. So it's still more than almost triple that amount. Bitcoin is back up to 44% dominance of the market share. So according to this article, they say Bitcoin is going to lose, or the Bitcoin itself is going to lose 40 billion market share, which would bring it down from right now to about about $75 billion, somewhere around there, 75, 80, or 85 billion. So let's see why. Why do they say so? Researchers from Switzerland published a 20-page study on the predictability of Bitcoin bubbles using Metcalfe's law and log periodic power law singularity. All right, I already can tell now we got a bunch of nerds in here. They're using statistical data, some which of it is true, but again, and I state this time and time again. Remember the article I read last week from USC, the other one from Berkeley? that they said their statistical data and they were wrong. You know why? Because the one thing they couldn't predict in their stats was human behavior. Human behavior, emotions. Especially when you have a whole bunch of people that have no knowledge, no understanding, no education in the crypto space, and they're being drawn purely by greed and emotion that's unpredictable. You have to take that into account when you use your statistical data. And a lot of times they don't. So this is going to be interesting to read. I do agree with Metcalfe's law, though. I mean, because that does take into account. So let's read this. If researchers from ETH Zurich got their sums right, by year's end, Bitcoin's value should get a haircut by as much as 44 billion, some 35% below its current 121 billion as of this writing. I don't believe that, personally. The recent study, are Bitcoin bubbles predictable? Combining a generalized Metcalfe's law. First of all, I don't even like that statement. Are Bitcoin bubbles predictable? By definition, you can't use the word bubble because when a bubble pops, it's done. Since when does a bubble reinflate itself? That doesn't happen. So already they're using the wrong terminology and it's loaded. It's loaded because it gives people the fear and impression that bubbles are bad. Bubbles have a time limit. Bubbles are going to pop. It's just a matter of when. That's not Bitcoin. Bitcoin's today's value is still almost 1,000% more than it was a year ago. You can't use because it dropped 70%. Yeah, but the 70% drop still has it higher than it was a year ago. Look at the history of the 9-year. I'll look at it right now. If you haven't done so, you want to use coinmarketcap.com. When you have Bitcoin education, then you know how to read this. It's telling you a story. Let me click on year to date from, I don't want to go all the way from 2013. Yeah, I'll go 2013, 2014, 2015. It remained like flatlined. Between July 2013 all the way to July 2016, there was a little bump up back in January 2014. It reached $12 billion market cap. But just a couple of months before that, it was only at $2 billion market cap. And it stayed flat. It even went down between 2014 and 2016. It dropped. And it stayed that way. And then all of a sudden it skyrocketed when we reached 2017 all the way up to December, where it capped out at, come on, my mouse, there we go, $318 billion market cap, $19,000 price, December 18th, 2017. And then it's had a steady drop ever since. It dropped all the way down to 6,200 on February 5th, rose all the way back up to 11,000. Oh, I get this right. 11,300 on March 6th, and then it's dropped back down to where it is right now at $6,793. Which is still higher than it has ever been in its 9-year history outside of the last 5 months of 2017. Where's the bubble? It should never have been able to rise up. And it should be at zero if it was a bubble. All right, let me get back to the article. Let's not get sidetracked. Okay. So, the recent study, Are Bitcoin Bubbles Predictable? Combining a Generalized Metcalfe Law and the LPPLS Model by Spencer Wheatley, Didier Sornet, et al. Of ETH Zurich's Department of Management, Technology and Economics, and Swiss Finance Institute at the University of Geneva, Switzerland, respectively, is attempting to make a prediction. Okay. We develop a strong diagnostic Mr. Wheatley explains. For bubbles and crashes in Bitcoin, by analyzing the coincidence and its absence of fundamental and technical indicators, using a generalized Metcalfe's law based on network properties, a fundamental value is quantified and shown to be heavily exceeded on at least 4 occasions by bubbles that grow and burst. Okay, that was a bunch of gobbledygook. Metcalfe's law has been tied to Bitcoin almost since the decentralized currency's inception, and in most contexts is employed to further a case for Bitcoin's eventual price increase. Essentially, Metcalfe postulated the growth of a telecommunications network is proportional to the square of the number of connected users. That's true. It's now known as the network effect. Mr. Wheatley believes the number of Bitcoin users is declining. I'm going to reserve judgment on that. Because if you look short term versus long term, there's a difference. And here's why. Here's why you got to be careful with this. Before November 2017, the news media wasn't going crazy talking about Bitcoin yet. And when it did, it was all negative. But as Bitcoin began to keep rising, and then all of a sudden, the Chicago Mercantile Exchange and the CBOE made announcements that in December, they were going to start doing futures. When that happened, then serious players started to take notice of Bitcoin. And now you started having, even the Big Bang Theory did something on Bitcoin. It started being in the news media. John McAfee, everybody started talking about Bitcoin. People started hearing about it at the water coolers. Stories of people getting rich. So now you had an influx of people and money who traditionally were not involved in Bitcoin join the space. And it shot the numbers sky high. These people and these numbers were not in the Metcalfe's law. They weren't predicted. Bitcoin at best was predicted to reach 10,000 by the end of the year. At best. The sucker shot almost up to 20,000. And then, when the market corrected, when the big boys, see, this is another thing Metcalfe's law doesn't take into account. Wall Street guys came in who are professionals, who have a lot of money and resources, who've been doing this for decades in the stock market and the Forex. And they saw that the crypto space is unregulated and easy to manipulate. And they manipulated the market down. They bet on the low. And they did it on purpose. And by doing so, it scared out all of these first-time Bitcoin people who listened to the news and had fear of loss, or we call FOMO in this world, fear of missing out, and was buying Bitcoin when it was at 14,000, 15,000, 16,000 because they didn't want to miss out. So they started buying because the news said, hey, yeah, Bitcoin's going up. And then when it came down, what did the news say? Oh, you better sell. Sell, you're missing out. The bubble's popping. We told you it was going to crash. And all of these people who had no business being here in the first place started selling when it dropped past 14,000, 13,000, 12,000 after they bought when it was at 17 and 18,000. Thus, doing the number one rule that if you have basic Bitcoin education, you know, you buy low and you sell high. What did these people do? They bought high and they sold low. So you take out now an extra $600 billion that flooded in the market in 2 months. You take it away, and then these nerds who's using, oh, we're going to look at the statistical analysis. Yeah, there's less people using it now than before. Yeah, because those people had no business being here in the first place. It's going back down towards normal numbers, normal levels. This is what it's supposed to be at. All right. I hope I didn't go over anybody's head there. This is why you got to be educated. You got to follow the news. You got to know what's going on. There's more to this than just looking at numbers on a spreadsheet. Especially you got to have skin in the game. You got to experience it. Even with cryptogenics, anybody that goes through education, that's only going to get you so far until you apply the knowledge. There's nothing like real world knowledge. The training is there to help you get started, to give you a foundation. So let me continue. He believes the number of Bitcoin users is declining. That's relative. It's all relative. You know what I always heard the thought? Place your hand on the stove for a second, and that second seems like an hour. Put your hands on a hot woman for an hour, and that hour seems like a second. It's all relative. Indeed, it would seem to be the case. Less folks are interested in Bitcoin. That's wrong. More folks are interested in Bitcoin now than ever, because more people are being exposed to it. If anecdotal evidence means anything, numbers across the board are down. Yes, that's true. In all sectors concerning Bitcoin, and are likely the self-fulfilling nature of rapid price declines in recent months. The authors acknowledge the inherent problems, however, in determining the numbers of users. Most enthusiasts use multiple wallet addresses. That's true if you're smart. That's one thing we cover in education. You don't have just one wallet. Did you guys hear me the other day when we talked about Chainalysis? This government watchdog association that is Big Brother spying on all your accounts, trying to track all of your Bitcoin addresses. You'd be silly to only have one address. When you look at the top 100 Bitcoin accounts, someone even postulated that those top 100 accounts are probably owned by 4 or 5 people. They don't have all of their Bitcoins in one account. That's stupid. What if you get hacked? What if you get stolen? What if you forget your password or something happens? You don't have all your eggs in one basket. They probably have hundreds of Bitcoin addresses. Now, I'm not saying that's what you need to do to escape the law or try to get out of tax evasion and all that stuff. For the record, since I know I'm being recorded and listened to, pay your taxes. I am all for paying taxes. I am not telling people to hide from the tax man. Pay your taxes. I know you're listening to me. So nobody can say I'm out there trying to start a revolution. Nope. Pay your taxes. But if you're smart, you always have multiple wallets and you don't have all your Bitcoin in one place. So, let me continue with this. Indeed, it would seem to be the case less folks are interested in Bitcoin. The authors acknowledge the inherent problems. Most enthusiasts use multiple wallet addresses, and so counting them seems like a dead end. That's short term. I'm telling you, the government will find a way. You have companies like Chainalysis. It's like Blackwater for the military. You want something done off the books? You don't want to put U.S. soldiers in danger? Call it Blackwater. The IRS doesn't have the manpower. The SEC doesn't have the manpower. Hire a company like Chainalysis to track everybody's Bitcoin wallets. So for example, let's say if it's true the price declines shed users, it's probably just as true price increases bring aboard more users. Instead, researchers use market capitalization as a better estimate for user growth or contraction. We emphasize that one should not focus on the instantaneous and rather unpredictable trigger itself, but monitor the increasingly unstable state of the bubbly market and prepare for a correction, they argue. All right, that's true, but you need to go a step further. You need to think like the Winklevoss twins, who said they don't care if Bitcoin hits zero. They still won't ever sell because they're looking at the long term. They're playing the long ball here. They know what happened between 2013 and 2015 when Bitcoin was flatlined. They're like, look, we know this thing is going to be worth over $100,000 and more. Why? Common sense, supply and demand. If you only have 21 million in existence, if half of them have been lost, if you only have maybe 7 to 8 million that will ever be in circulation, and there's more millionaires and billionaires on the planet today than there are Bitcoin, every single one of them can't buy or own one Bitcoin. They can't. It's going to be a status symbol. That's why I tell you guys now, you must own at least one Bitcoin and stash it away. Stash it away somewhere. Don't touch it. It's going to be a status symbol in a couple of years. You're going to go into the club or the bar and be like, yeah, I got a Bitcoin. What? What? A whole one? Not just a Satoshi? It's going to be so rare to find people that actually own one full Bitcoin. Let me continue. In any case, the paper continues, the predicted values for the market cap indicate a current overvaluation of at least 4 times. I don't agree with that. I agree it was overvaluated when it was at 20,000. I think that where it is right now is exactly where it's supposed to be. And the Metcalf support line suggests current values around 44, 22, and 33 billion USD. I don't agree with that. Not that low. Oh no. So in contrast to the actual current market cap of 170 billion, further, assuming continued user growth in line with the regression of active users starting in 2012, the end of 2018, Metcalf predictions for the market cap are 77, 39, and 64 billion respectively, which is still less than half of the current market cap. These results are found to be robust with regards to the chosen fitting window. On this basis alone, the current market looks similar to that of early 2014, which was followed by a year of sideways and downward movement. Okay, I might agree with that part. We don't know how long this sideways movement's going to take place. It's happened before, and it's happened and it took more than a year. There's a lot of things in place right now that forced the market down right now that was not there in 2014. Confidence, basically. Regulations. The big boys are in. The futures are in. So that's unaccounted for. We don't know how that's going to play out. So it says the LPPLS comes into play when evaluating Bitcoin's historic bubbles. And Mr. Wheatley examines 4 in particular: Mt. Gox and South Korea's perceived threat to ban exchanges being the most prominent examples. The only problem I have with that, using South Korea threat as an example, is that China, all the way up to 2017, was leading the world in cryptocurrency exchanges and trading and volume. And then they shut everything down July, August of last year. The market did not go down when that happened. The opposite took place. So I'm not too sure I agree with using South Korea's perceived threat to the bans as a reason why the market's going down. It may play partly, but I don't think that's significant. Crashes or crazy corrections usually followed. I just think it's a matter of time. It's a rubber band effect. The thing is being pushed down so fast right now, or so long, and being held back, that when it rebounds, it's going to rebound hard and fast, going in the opposite direction. And I think the CME, the CBOE, they know this. Jamie Dimon knows this. Rockefeller, George Soros, they know this. That's why they're all buying the dip right now. While they shook the tree and kicked out all the people who didn't belong in the first place, dropping the price, they're buying the dip. While everybody else is panicking, should I sell? Should I sell? They're buying. Follow what the wealthy people do. All right, that is it, because we have in 20 minutes our evening presentation. And why? People ask me, why cryptogenics? Brandon, what's going on? There's many reasons why. But if you can't relate, I'm going to tell you one reason why you should look. Today is Monday. And aren't Mondays the hardest? Co-owner Mike Boggs called me this morning complaining that it was like snowing where he is right now. And I'm like, yeah, it's 93 degrees in California today. It was very nice today. But most people woke up this Monday morning before the sun came up. tired and, hating the fact that the weekend is over. They just watched WrestleMania yesterday. You gotta go back to work. Going to rush hour traffic, to rush off to a job you don't like, to work with people you can't stand, to eat lunch at 12 when you're hungry at 11, to ask for permission to go to the bathroom as if you are a child. Knowing you're going to do this for 40 years of your life if you're lucky to have the same job anyway and not get laid off. Only to retire at the age of 65 broke, depending on family, government, and friends. Knowing you have no 401k, no pension, no savings, no retirement. Your house is a liability and not an asset. And you're looking for a way out. And you see these people get into this crypto thing, this Bitcoin thing, and they're making money. And the first thought in your mind is, what the heck is a Bitcoin? What in the world is cryptocurrency? What is blockchain technology? I remember when I was talking to my brother last summer about cryptocurrency, he said, what is that, kryptonite? That's what he said. And then he said, why would I want that? I mean, the US dollar is the real money. It's backed by gold. And I'm like, Devin, the real money hasn't been backed by gold since 1971. Which proves my point. Most people have no knowledge, not of cryptocurrency, they actually have no knowledge of the money in their hand right now. Financial illiteracy will kill you. And the new financial literacy of this new world is cryptocurrency, whether you like it or not, whether you respect it or not, whether you believe in it or not, whether you made money in it or lost money or not. This is the future. It is the greatest economic shift in wealth in the history of mankind for the most amount of people. The greatest invention since the internet. And when you see George Soros and the Rockefellers getting involved because they know something. That's right, Kathy. A $100 bill is only worth 13 cents. It's not even worth toilet paper. And that's what you're going to put your faith behind? The world is changing. You either adapt or you die. Why cryptogenics? Because we're bringing education to the masses. Education to the people who are scared. To the people who don't know where to begin. To the people who don't even know the right questions to ask. And we're bringing it to the world. We're starting a movement here. That's why. And if you want to know what it's all about, in 10 minutes from now, co-owner Stephen McAuliffe will be doing a live presentation, a Zoom, on cryptogenics.net. If you want to find out what cryptogenics is all about, hop on there. And then get back to whoever it was that told you about it or invited you on. And get started. What's the risk, you may ask? Because I don't know, man. Is it one of those things? I had a good friend of mine say, oh, you got caught up in one of those things again? I'm like, what are you talking about? It's not one of those things. It doesn't cost $10,000, $50,000. You're not investing your home or mortgaging your, selling your car. You know what? You don't want to know what the biggest risk is? $300. $300 to get crypto education knowledge that is priceless. I started with $100 and made a small fortune. Priceless. You share it with 3 people. Remember my rule number 3? Get your return back as fast as possible. Share it with 3 people. You just got your money back, and now you're getting crypto education for free. That's right. So hop on it now, 10 minutes. Kathy typed it in, cryptogenics.net. We will see you all then, and I will be back tomorrow morning for early morning crypto talk, and then I'm doing a presentation tomorrow night, 9 p.m. Eastern, 6 p.m. Pacific, Cryptogenics. We are on and popping right now. And I'll see those of you in London next week. That's it. Bitcoin Brandon out. God bless. Bye-bye.
Cryptogenics.